Welcome to the latest Motley Fool scoreboard. I'm on Chalk Balloon. We've got longtime fools, Dan Kaplinger and Jason Hall, giving a 1 to 10 rating to what I tell friends and family to buy if they need a one-stop diversification tool or if they don't want to pick individual stocks. It's the Vanguard Total World Stock Index Fund ETF, ticker symbol VT. Hereafter, we'll just call it VT. We don't usually like to talk just in ticker symbols, but I think you'll forgive us on this one. This is the last of our weird series, like Bitcoin and gold before it. VT doesn't quite fit into our categories, but we think it'll be instructive to score it. We'll talk about the business first, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Both of you have 7s, Dan.
Yeah, so I decided to try to figure out this ETF has thousands of different stocks in it. In general, we tend to like more businesses than we dislike. And with the market cap weighting, we tend to like successful businesses that are worth more than we like less successful businesses that have lower market caps. That's where I get to an aggregate of 7.
Yeah, you get to fish in a bigger pond here, right? And that diversification of finding more winners, because we know as the winners win and they concentrate, the losers become less relevant. This is a way to gain more of that exposure to the global opportunity. So, and I'll add that for investors who are also maybe not necessarily looking for just more diversified, but are worrying about the massive concentration of the S&P 500 that's emerged over the past decade, it's a great way to diversify your ETF exposure. So the top 10 holdings of VOO, which is the S&P 500 ETF from Vanguard, the top 10 holdings make up almost 40% of that. They're less than 20% of VT.
Beautiful. That's what I like, the global diversification. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Jason's at a 10 out of 10. Dan, you're at a 7.
I took a different approach from Jason. I agree with Jason's approach. The reason for my 7 is, again, I was trying to aggregate over the businesses, all those thousands of businesses that you get by investing in this ETF. And I think that in general, most stocks have been successful. The biggest stocks have been the most successful, and we like those management teams. I also prefer the Total World Index to some of these indices that only look at the top so many stocks, because it just gives you more complete diversification, which I think a lot of people are looking for.
Yeah, my approach here was thinking about Vanguard as an organization. There's Invesco and there's iShares, which is part of BlackRock, which are some great organizations, but most of them are built to generate and derive profit. And we love that as investors, right? Vanguard's different. It's owned by investors in the funds that Vanguard creates. And if there's one thing that I love is when management incentives are extremely aligned with the investors. And in this case, it's perfect because the incentives are to build excellent investment products as cheaply as possible. And Vanguard is consistently the lowest cost. So even VT, which is twice as expensive as VOO, that S&P 500 index, costs twice as much to invest in it. You still, for every $1,000 you have in the fund, you're only paying 60 cents a year, right? 6 cents for every $100. It's super cheap to invest in Vanguard funds, and it's an organization that's built to do that.
Right on. A 10 is a fortress for financials. A 1 is yikes. Jason, once again at a 10. Dan, you're at a 9.
Yeah, this is where I assessed Vanguard and that low expense ratio that Jason was talking about. It's really hard to match. There are some ETF providers that try to offer similarly low expense ratios, but be careful. Some of them are promotional in nature. They're only that low for a time, and then they kick back up. Vanguard consistently low cost. That's why I have a lot of my investments in ETFs in Vanguard ETFs.
Warren, I have nothing to add.
All right then, Jason, let's talk valuation. How will VT perform over the next 5 years? How safe is it? A 10 is a sure thing. A 1 is a lottery ticket.
Yeah, my safety score is 8. And I expect we're going to get what the market has generated over the long term in that 5 to 10% range. I've got a safety score that's higher than Dan's because I think if you look at the U.S. market, the dominant market, where we have pretty high valuations right now and the expectations that are so tied to AI, I think that's offset to some degree by a lot of really cheap global indices And while there's always the threat of a black swan event hitting global markets, I just have little doubt that in a half a decade, the world is not going to be smarter, happier, and richer than it is today.
I'd agree with all that, and that's why I'm comfortable with 5 to 10%. Safety score of 7 indicates a good level of safety. It's just that don't overestimate the lack of volatility in the stock market based on what you've seen recently. Really, this depends on your return expectations, and what I've said here is consistent with what I see markets more broadly doing.
Thanks to both Dan and to Jason. They've given the Vanguard Total World Stock Index Fund ETF an overall score of 7.5 out of 10. I scored this one pretty similarly myself. We differed on a few of the categories. As for toppers, Dan had none, but Jason prefers the Invesco S&P 500 Equal Weighted ETF, ticker symbol RSP, which has outperformed VT over the long term. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is an actual stock, I promise. Till then, Fool on. Crap, sorry. I Jason hauled that one. Here we go. 3, 2, 1.
Hey, Anand.
Yo.
Vanguard Total World Stock Index Fund ETF. It's not that hard.